Welcome to this week's Trippin with Silver Daddy. Understanding whether we're heading into a recession or in a recession is crucial because it allows individuals, businesses, and the government to prepare and to adapt. I want to show you and explain an unbiased approach to figure out the question, are we heading toward a recession or in a recession? Yes, let the facts point out. Don't listen to CNN or Fox spin or corporate spin about what we're doing. I'm going to give you the facts. So, are we in a recession or heading into a recession? What that means to the middle class or the poor people like me compared to the elite or wealthy people like you. Well, in this podcast, I wanted to discuss the question, are we in a recession or heading into a recession? The next podcast, I'm going to explain what it means to us. How do we know if we're headed towards a recession? We look at leading indicators. Leading indicators of a recession are economic measures that tend to happen before it occurs. Some of the most common monitored indicators are the inverted yield curve, declining consumer confidence, rising unemployment, the ISM, the GDP, the CPI, falling retail sales, and credit tightening. These are the major factors that we got to look at. They're numbers, people. It's not someone giving an opinion. It's facts. So an inverted yield curve, that's when the short-term interest rates exceed long-term rates. It's often a signal. It signals the economic uncertainty and has, historically preceded the recessions. Let's break this down. An inverted yield curve occurs when the short-term interest rate, what is short-term rates? In the bond market, short-term rates typically refer to rates on debt securities, and these rates are influenced by the central bank policies, such as the Federal Reserve. What's going to happen in this is your short-term rates, and when we're talking about short-term, that basically means that the rates are on the treasuries that are less than 1 year coming due. So when these short-term rates are higher than the long-term rates, what is a long-term rate in the bond market? Typically, that's associated with debt securities that mature in 10 years or more. So these rates are influenced by factors such as inflation, projections, what the investors' sentiments are. Common example of these long-term rates are usually 30 years, like the 30-year Treasury bonds and long-term corporate rates. These are the rates that are used most often to benchmark things like our mortgages, loans, and other financial products. So normally, long-term rates are higher because investors demand greater return for locking their money in for a longer period. However, when the yield curve inverts, it indicates that investors are worried about the economy's future health, causing them to seek safer long-term investments even if they offer a lower return. This phenomenon is often viewed as a warning sign of the impending recession, as it suggests uncertainty of what's expected and the worst to come. So the big question is the inverted yield happening now? The answer is yes. The next thing is declining consumer confidence. A drop in the consumer sentiment can indicate reduced spending, which is a key driver of the economic activities. The U.S. consumer confidence level for the past 3 months, as reported by the Confidence Board, are in March it was 92.9, February it was 100.1, January it was 104.1. These figures slowly have been declining, reflecting the growth of certainty of the economy condition. It's a 12% decrease in the first quarter of 2025. It's going down. Rising unemployment, an increase in jobless claims. Is this happening? Well, in March, the estimated claim for right now, this past month, is 299,000. In February, it was 242,000. In January, it was like 143,000. We're 109% increase in unemployment claims since January. These numbers fluctuate in the labor market. Then we got what I call the big three. We're talking about the ISM. And then we're talking also about the CPI, and there's the other one. So the ISM, I'm going to start with that one. What the ISM is the Industrial Manufacturing Index level. For the past 3 months, it's been pretty stagnant, pretty right around 50%. And that 50% is the hovering near the threshold. If it goes above or below, that is determining. But it's been right at 50.3, 50.3, and 50.9. So that's been kind of pretty consistent, right where it needs to be. The gross domestic product, the GDP, it measures the total economic output of our country. And it kind of determines the overall economy health on a quarterly basis rather than monthly. So the fourth quarter of 2024, the GDP grew at an annualized rate of around 3.1%. So there was a 26% decrease in the first quarter of 2025. And, that's kind of common because we just came out of Christmas season. So it is going to drop. So right now, we really got to see where this next month is going to be. Now we have the Consumer Price Index. It measures changes in price level of like a basket of things that we buy at the grocery store. The Consumer Price Index data for the past 6 months has kind of really reflected the following annual inflation rates. In February, it was 2.8, January 3%, December 2.9, back in November, it was like 2.7 and 2.6 in October and 2.5. These figures show a gradual decline in inflation over the months. When the March figures are released in a couple days, it will be a big indicator on if we are in a recession. My gut is telling me we're going to be around 2.6%. So these indicators, when analyzed together, can provide a clearer picture of the economy trend and potential turning point. The fifth thing on this group is falling retail prices. A decline in retail consumer spending on goods and services is often the retail sales rose by 0.2%, rebounding from January, which was a big decline of 1.2%. Once again, we do expect retail sales to decrease in January because of the holiday period. So these figures reflect some fluctuation in consumer spending with a slight recovery in February and March after that big drop in January. And as I said, that big drop is always historically caused by the holiday season coming out of that. The sixth thing we look at is credit tightening. When the creditors reduce lending by banks can signal financial stress and lower business investments. Recent reports such as the Federal Reserve Senior Loan Officers Opinion Survey, SLOES, they are showing that it is tightening credit restrictions over the past 3 months. This tightening has been observed, in the commercial, and you'll see this more in the commercial, industrial, and household loans. So these indicators are closely watched by economists and policymakers to assess the health of the economy. A lot to tell you. Here's how we're going to know if we're in a recession. What we're going to do is give each one of these categories that we just talked about, we're going to give them a yes or no. Do they show we're going to be in a recession? Yes or no? Then we're going to total up the yeses and nos. We're going to turn it into a percentage of overall. And that should tell us if we are headed or in a recession. So here we go. Is there an inverted yield curve? Yes. Is declining consumer confidence? Yes. Rising unemployment claims? Yes. The ISM? No. The GDP? Yes. The GPI? Yes. That's 5 there. Falling retail? No. And is credit tightening? Yes. So I got 6-2. So 6 yes for recession, or 75% says we're in a recession now, and 2% says no, we're not in a recession. 2 of the things, that's 25%. So just statistically proven, yes, we're currently technically in a recession. And that's important to know, because it's how you're going to act. See, I'm in this beautiful park, and that's where a lot of you are going to spend your summer vacations, by your house in a park. I have more to tell you tomorrow on how it's going to affect you, if not tomorrow, the next day. But I want to thank you if you listen to this whole 13 minutes about the economy, which I know is pretty boring, but I want to thank you very much, because, you can always subscribe and follow. And remember, as always, you are listening to Trippin' with Silver Daddy. And always, I forgot to say, love, peace, and respect, because that's how I live my life. Bye.